Thank you, Mr. Kunal, for spending some time with us to talk about the fundamentals or the balance sheets of gold and silver, actually. And your session on the macro views were extremely wonderful. And now we understand where the bullion as a sector is going to go towards, actually. So let's talk about the gold on the supply side, actually. So what is happening curiously in gold in this kind of a bull run that happened during the last year? I mean, we couldn't see any investment in new mines coming up. We couldn't see new explorations happening, actually, because end of the day, the futures market is a function of what is there in the physical markets, what's happening in the physical market, actually. So one is that on the supply side, there is no new mines coming up, and so supply is going to remain the same, or even it may go down as well because of the COVID related conditions and things like that. That's number one. And number two is on the demand side. You could see some restrictions which is coming up at this point in time, because there is a sale of stocks, especially the ETF stocks, which you talked about, is happening. And secondly, on the jewelry side as well, you could see the jewelry demand not so high, because of the love factor, which you explained to us in the previous session, is not there, is no longer there. So where do you see this is going to play out in terms of supply and demand, and hence the prices?
Yeah, so like for most of the commodity, apart from the macro, then comes the micro, which is the demand and supply. And like you rightly pointed out, it's very interesting that in 2018, the gold supply stood at more than 3,600 tons, which this last year in 2020 was 3,450. So we've seen gold supply going down predominantly because of the COVID. A lot of mines got shut because of the COVID. But I think the broader reason for gold supply, the why miners are not producing gold. So average cost of production for gold would stand between $1,200 to $1,300.
Okay.
2 years back, it was the same, was $1,000, but now $1,200. In spite of the fact they are getting $1,700, $1,720, the production is not increasing because all these gold mine, the kind of royalty charged on them and the kind of social initiative they have to do for the country, which is allowing them to explore gold, it becomes too much for the mining company. So I've attended a lot of international conferences, and my understanding is whenever these companies used to give their presentation, they used to always talk about the kind of pain they are going through because of the kind of royalties they have to pay to the government, because the kind of social benefit, social initiative what they have to give to the country, it becomes very difficult for them to sustain. So when gold prices were down, so I'm talking about 2018 when I attended the last international conference, the overall miners' point of view that nobody wants to explore more. So when it comes to gold, the supply is not increasing because of these reasons. And when you talk about the demand side, okay, last year we've seen a 40% drop in the jewelry demand across the world, mainly led by India and China, because no one wanted to come out of their home.
Right.
But this year, I think that 40% loss in demand as compared to 2019 would be 20%. So I think we are going to see a good jump in Diwali. Already we've seen the local gold this conclave. The association is also, I speak to the Gold Association Bullion, and there is a good revival in the gold demand from the jewelry side. A lot of marriages with the limited restrictions are going to take place this year. So I think the gold demand now, jewelry demand is going to increase. So on the global front, last year we've seen 1350 tons. I think this year that should be somewhere between 1700 tons, something like that. That numbers is very likely.
Okay.
But pre-COVID level, I think it will still take one more year. But the major loss we had this year is, last year we had a ETF demand of gold, that is 870 tons of gold ETF demand what we saw. And this year we saw 245 tons of withdrawal,
Liquidation.
So the net impact from the ETF demand is 1000 tons of loss of demand from ETF. That's too big for gold market. So that's the reason why gold prices are down by 54,000 to 46,000 today, or 45,500 today. So, like I said, when this fear moderates, gold prices will not. Suddenly, you see, for example, Dow Jones going down by 2,000 points, a global turmoil. Again, people will realize, okay, there is only one savior, that is gold. So Bitcoin, it's not officially regulated by many countries. So I would not compare gold market. The size of Bitcoin market is $1 trillion. Gold is $10 trillion. It doesn't make. So I will not give any discussion whether gold is better or Bitcoin. By default, gold is better than Bitcoin if you want to diversify your reserves or your savings. So I think in current scenario, from the demand point of view, like I explained, two demands which are going to be the key driver of the prices. One is the jewelry demand, which is going to improve as compared to last year, not going to be reaching pre-COVID level next year, but I think it's the central bank diversification. So because of tapering, if gold prices hit $1,700 or $1,680, I think the central bank, maybe Central Bank of Russia, maybe Central Bank of India, I'm not just giving you the example. Some of the other central banks are going to diversify their reserve because no one wants to buy US bonds. Globally, there are $19 trillion of bond market are into a negative return. Why you want to have an holding, or why you want to buy bonds of the government right now? So since there are no safe avenue available for the portfolio diversification, gold will act as a major source of diversification for central bankers in next, not one, not two, for next 2 to 3 years conservatively. So forget about the price outlook right now, but just this two demand will be great. And once there is some bit of turbulence in the global stock markets, I think the ETF demand will be back. The way they bought ETF, the way they sold ETF this year, 240 tons. Remember, in last 3 months, last year, in 3 months, they bought 400 tons of ETF. So this number can change very drastically provided the scenario. So I'm not predicting anything for stock market, but I'm saying, for example, if stock market starts to witness correction, I think the ETF demand will really come back. So from here, the downside is very limited. That's my clear view. So we are at that juncture when the maximum downside from the Indian rupee point of view, 1,500 rupees, maybe 44,500. I think that at that time you should not worry about how much down it will go, and you should start accumulating.
Thank you. So, in a way, what you are saying, one part of the demand may likely remain, which is the investment demand, be it the investors or be it the central bankers. So they might still be interested, something had to happen in the markets and things like that. On the other hand, you are saying that the jewelry demand, because we are coming into normalcy, is also likely to boost up. And so those are all going to be a bullish factor in terms
Yes.
of demand, actually. And the supply is going to remain the same.
Yes.
So that's one of the reasons why you are saying that the gold prices are in a safe territory from here on.
Yes.
And where it moves is something which is a function of what it happens in the economy, especially.
One more factor I will attribute: the volatility across the world is so low right now. I'm not talking about the price swings, but the VIX, global VIX of the stock markets are so low right now. Any black swan event, like we saw what happened in China, China's property slowdown, or any problem right now, and you'll see VIX shooting up quite sharply, and that also would be an indication that again time to be in gold. So gold right now is a strategic investment. I would not call investment. I would call gold strategic investment because in these times where you don't know what's going to. So if somebody asks me, Kunal, what's going to happen 2 years down the line to the world? The honest answer is I don't know. And that's the reason for that don't know. You should have 8, 10, 15% gold as your portfolio diversification.
Correct. So the investment demand is going to come back,
Yes.
saying that, so that's likely. So that's a, kind of a positive news for the market. So let's see how that is panning out in terms of the economic numbers and things like that, actually. So, coming to the silver, actually, so unlike gold, silver has an industrial demand as well, actually. So, where do you see the supply and demand situation for silver likely to be in terms of the investment demand for silver, in terms of the industrial demand for silver, and in terms of the gold silver ratio, where it is headed towards? I mean, is it favoring more gold purchase? Is it favoring, more silver purchase? Where do you see that?
Okay, so in 2018, silver demand was 855 million ounce. Okay,
Okay.
and in 2020, from 855 in 2 years, that demand that supply dropped to 784. Okay, so we've seen a sharp
Decline in
in the silver production. 2021, I'm expecting silver production to rebound from 784 million ounces to conservatively 830 million to 825 million ounces. So all the production lost, which we've seen, I think we've seen, like I said, 9% production loss in silver. I think more than 50%, 60% of that is going to come back to the market.
Right.
So I think the supply side looks better. Other thing is scrap supply. The silver scrap supply is also going to increase. So once you see the scrap, last year we've seen 180 million ounces of scrap coming into the market. This year it will be 200 million ounces of scrap coming to
into
the
the
market.
market.
So I think silver scrap supply is also which is bothering the market right now. From the demand side, the industrial demand is something, mainly from the electric and solar.
Mhm.
These are the catalysts for the silver demand, even from the pharma sector, but electronic sector and the solar sector, the photovoltaic cells are made out of silver, and these two demands will continue to remain strong because oil prices are very high right now, and they are expected to remain high continuously going forward. So these two sectors will continue to do well. Jewelry, not is stable from last 10 years. If you see, we've not seen a single year. The average jewelry demand is 200 million ounces. So we've not seen a single year where jewelry demand has shot up to 250 or 280. So the silver jewelry demand is no longer a price decider like gold. So even in gold, it can help, but it's not a price deciding factor. Silver ETF, like I said, the holdings are not getting reduced. That itself is a big positive news for silver. But at some point, if there is a capitulation due to any reason, at that time, some holdings may go down. But I think the brighter side for silver is once the world is again coming into growth trajectory. Right now, there is a shortage in the electric industry from the semiconductor point of view. So the electrical demand is also moderated, but in a long run, electric demand of silver is going to go up. So the amount of usage of silver is going exponentially, and new supply. This year, is supply is going to rise, but from last 13 years, there is no major addition to silver mining capacity across the world, and majority of the silver production come from the secondary mines of lead and zinc or some of the copper mines. Okay, so we have not seen any growth in the primary silver production. So India's primary silver production is grown by Hindustan Zinc, but not the other across the world. That's not the case. So I think silver looks also interesting once it goes down to the level of say 55, 56,000. I think it will make a very strong, compelling case, because since I'm bullish on gold from the longer term perspective, I cannot be bearish in silver from the demand side point of view. But I don't expect silver to outperform now the way it did last year.
The way it did. So the way it did last year was also, if you remember, Kunal, was because all of a sudden we were all adapting to the IT instruments actually, because we were not able to go to our office spaces, and so we were in need of our routers or computers and modems and things like that, where the chips are being installed, and where silver is an essential ingredient, as you rightly indicated, that it actually is going to support. The expectation was that it is going to support. But on the other hand, if you see, because the chip industry, where silver is again an essential ingredient, which is going to make up for the laptops and mobile phones, is suffering from kind of supply constraints as well, actually. So, is the industrial demand going to pick up given the chip production is under check because of various other factors which is not related to the silver supply, silver prices, or something like that actually. So, how do you see the industrial demand, especially that electronic part of silver demand?
I think that demand is going to remain strong going forward. I don't see any reason why that demand is going to abate. Uh, with the global economy again getting on a stronger note, whenever next year, I think the demand side is really looks very bright from the silver point of view. Industrial side of the silver looks very attractive to me, but unlike gold, we don't see central banks buying silver.
Correct.
So that demand is missing in silver. So, like I said, the reasons none of the central banks are buying or hedging or diversifying through silver. And so that is one area where silver lags behind gold.
So, one of the ideas maybe to the government of India is to issue a gold bond, sorry, a silver bond, similar to the gold bond. They should issue a silver bond as well, actually. But, given the kind of behavior that silver had been compared with gold, the prices have been so mature in gold compared with silver, which is, by the name itself, it indicates that it is too shiny and too volatile, actually. Would it be a good instrument in terms of a sovereign to issue a debt against commodity like silver? What's your view on that? That's an interesting area.
That's a very interesting question. And first of all, one of the reason why the sovereign gold bond scheme, I think, as per my understanding, India had to cut down their gold imports.
Exactly.
That's not the case with the silver. So in silver, we've achieved. So even for gold, we in Karnataka we have still a lot of gold reserve which is still to be mined. And but in silver, Hindustan Zinc is doing the great job in India. The way the silver production. So the silver imports in India are not a major cause of concern. So the first reason for government not to introduce sovereign silver bonds is this. Second reason is, like you said, it's not suitable. The price fluctuation of silver is not something, which retail investor will be able to digest. The way the volatility of silver is, at least when it moves up, it's too high as compared. So it's not in the interest of a lot of retail investors to invest in silver. That's the reason why they prefer gold. So silver 45,000, it goes to 55 to 50. That doesn't happen in gold. Gold doesn't move up by 10%.
It's a very mature asset class.
It's very, very mature. But silver, by its own nature, it's very volatile, and that's one of the reasons. Well, I don't think so that it's a great product to have as a sovereign silver bond. Gold, yes, I would still.
It's a good instrument to trade, but not a great instrument to invest in,
Yes,
actually,
exactly.
because it has a
You cannot say that silver is a hedge against inflation, or
Correct,
silver is a.
correct.
You cannot. For gold, you can. It's more scarce. Gold is more scarce as compared to silver. So I would always say, when people say bullion, it generally gold, silver, platinum, palladium, but there's still a special place for gold right now across the world. Not because gold from centuries, if you see, even in an ancestor, our ancestor used to use it as a currency, and that role is still preserved. You carry a gold coin anywhere across the world, you will get the same value. That's not the case with the silver today.
Okay. So, in a nutshell, I mean, whether you would want to see silver to be part of the investor's portfolio or not, but you would, given the situation which is going to remain, you would want to see gold diversifying their portfolio so that the portfolio remains well protected and things like that. So,
They can invest in silver, but for traders or the investors who are willing to see the higher volatility, for them it is a good option.
good option. Okay. Thanks a lot, Kunal. Thank you for your time and talking to us about the balance sheet of the gold and silver. It was a very wonderful discussion. We hope to have you again in the same commodities dialogue. Thank you.
My pleasure.